All right. Welcome everyone. This is Bob Maurer. It is Monday, the 5th of August, a little after noon my time. Let's do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. I know a couple of them have come off the board, and I've got one new one to introduce. So let's roll up our sleeves, get to it. Down into the portal, you'll see the most current PDF version right here, and that'll bring it up. And that's for this week, the week of 8/4. And this is what we're sitting with. So we've got strategies 311 through 316. Top five rows are all bear spreads, 311 through 315, and then 316 was a bull spread in gold. Two of them are off the board, meaning they either hit their targets or timed out. 311, the top row, rough rice. That one timed out. We'll see how that one ended up. And then 316 on the bottom row, the bull spread in gold. It hit its target and actually pummeled or soared right through target two. And we'll take a look at that too. Although with the break that we saw in the equity markets on Friday and continuing on through today, you can see how there might be a safe haven type of play with gold, and it popped. So let's take them one by one, shall we? First one is 311, rough rice, bear spread. We had day zero back on July 5. This thing ended on July 30th, and it started at negative 24 half. And the day bar chart there shows that it settled at negative 23 half, which would imply a 1 cent loss, which would be 20 bucks if you held it to the close to get out and you got that low. But I don't think I subscribe to that close, meaning we dial out a little bit and maybe look at a 30-minute chart. Take a moment to load up here. Then we go back to the actual day where it ended. Okay, July 30, 29. It's had a closing range of about negative 19 to negative 22. So, on the day chart, it shows it settled at negative 23 half. I think what the exchange does basically, my interpretation is it'll do a volume weighted average towards the close there to give a more accurate settlement relative to where the action was within that closing range, but it doesn't necessarily mean that's where you could have gotten out. So I think the honest way to look at it is you would have gotten out somewhere between negative 19 and negative 22. All right. So it would have been a little bit more of a loss. So I just want to make that point. And anyway, this one turned out to be some level of loss, anywhere from getting out at negative 19, which would have been about $100 loss, give or take, to negative 22, which would have been about a, you know, $40, $50 loss, something like that. All right. So this one basically just didn't work out. And you can see kind of it lined up at the low here. The market had been diving into the seasonal window. Maybe that was a bit what was at play there, but I thought we had a chance when we got towards the last third of this seasonal window, yeah, where it was kind of struggling to get above that red line there, which is a 20 period exponential that maybe we just saw in the last few days of this seasonal's life, the market break down and maybe get to our negative 29. So net, not a big loser. You got to make sure that you appropriately size any position relative to the amount of risk your account can withstand, but ended up being, like I mentioned, with those relatively modest losses. So this one's going to go off the books as a realized loss. Then we're going to go to crude oil. So this one seems to be working out so far so good. This is number 312, light sweet crude oil, the Jandice, and I tightened up the stop on 8-1. It's down to 61, which is the benchmark slash entry level one level. So At worst, I guess, if all you did was get into that entry level one, didn't bother getting in at entry level two, and that was the only position you were carrying for whatever reason, it would be hopefully a scratch for you. That's why I wanted to drop the stop. Plus, a lot of times gone through the seasonal window, there's not too many days left. And the market did uh, have a pop here in the 3 or 4 days back, stalled pretty quickly, and is continuing to the downside today. Now, Friday's low was 37. Today's low so far is 37. For those of you who got out at 45, awesome. For those of you who are stretching to 28, got to stop tightened up to 61. You might even think about tightening up to maybe being a profit stop of going to about 57 or so. At least lock in something if the market turns around quickly. But with the big move to the downside in the broader market, the S&P's right there down 134 right now, although off their low by 120 points. The Dow's down, still down 900, trading, let's call it 39,000, and the low was 38,541. So it's 450 points off its low. So the markets, with that continuation, at least as long as you've seen red there, might give the energies a bit of a challenge trying to rally. So hopefully we see a little snap to the downside. 37 is where we're at right now. Our next bid down there at target 2 is 28, so we're 9 points away. Maybe we get it overnight if there's some kind of follow through to the downside in the European and Asian markets, and then we wake up tomorrow and we're down again. So we'll see how it plays out. All right. So basically, some profits may have been locked in already at 45 at the first target, which we got. The stop I'm recommending to lower to at least 61. Maybe if you want to be a little more conservative, about 57. And then we are trying to stretch this to see if we can get down to 28. Just a couple of days left or so in this seasonal window. So we'll see how it plays out. Okay, so then we've got feeder cattle. Guess we call this strongly sideways. This is strategy number 313. The benchmark was 27. That was the high on day 0. And we touched the low here, getting pretty close to target 1 about a week and a couple few days ago. And market basically has been stuck between, the bulk of it's been between even money and that lower range there of about minus 60. So that's a $300 range. And it's just been kind of moving sideways. And it's been doing that since even before the seasonal window. So you're right in this area, there's congestion. So it's basically stuck in this little value area. So we need some kind of catalyst to push this market, to help this market higher. And we'll see what happens. But basically, we're sitting with no fills and no change to the strategy. We're just sitting on the sidelines waiting for something to happen, give us a better idea of how to proceed forward, but we're going to stick with the data for now. Fat cattle. All right, so this one's interesting. This one you should be out if you were hardcore set with your stop at negative 87. I know I touched on the fact that there was a tendency for the Feb live cattle to have a pretty sizable break, and then the potential could have been that it brought this spread along with it. And I would say that topped off on July 31 and dipped into Friday after a decent rally attempt on Friday, but kind of fell to the bottom third of the range. But now we're shrugging off that weakness. So we'll see how this plays out. It's really interesting. So basically, this one, if you were dedicated to the stop, you should be out. There should have been some level of loss. 220 for the regular entry traders, around 640-ish for the average in traders if you got in at both levels. Average in. So that's that. For those of you who are still on board with this one, thinking that maybe the weakness in the Feb live cattle contract will eventually rear its head in this particular market, you will need to watch it closely. Let's just put it that way. Just to give you some perspective here, if you look at the fat cattle, the Feb delivery, which is our front month for the spread, this is that massive break. All right, that looking at the seasonal for this particular delivery month, in my estimation, was projecting. All right, so we got the break, but what we're not seeing yet is it, if at all, we'll see how this plays out, which is why we need to be careful. What we're not seeing yet is the corresponding break in the spread. Okay, the bear spread for the Feb live. So we'll see how it plays out. So again, I'm gonna book this as a loss, and then anybody who's still in it, who's kind of working with that data for the Feb Live cattle futures, see if this thing might have a break. I'd be happy to consult with you on that one. All right, so that is strategy number 314. It's going to go off on our books as a realized loss. And then we've got the natty gas, number 315. All right, bear spread. We're trying to get into this one still. Basically, we're looking to get short at negative 280 or negative 268. We just need this thing to rally, get some kind of reason to come up and touch us here, let us in, and then fall back on down. So we're basically sitting patiently on the sidelines until it gets to our levels. And again, this might partially be with what we're seeing in the broader market, and what some are anticipating at the moment, at least discounting in the equity markets, is some kind of slowdown. That's natty gas. And here's that gold I mentioned. It had a stronger than expected pop. This one's going off as a realized winner, some kind of gain. Strategy number 316, bull spread in gold. Hawk versus Dees. We were looking to get long. The only level it allowed us to get into was right at the entry level 1, which is where it was benchmarked on day 0, which is negative 237. We were only looking, based on my interpretation of the data, of negative 230 as a possible target. And as you can see, this thing really soared higher. So as the equity markets have broken as hard as they have, my opinion is that you see some kind of flight to quality, flight to safety. And gold has been the benefactor, at least as evidenced through the spread, right? So today's high is negative 204. This is negative 237 is the benchmark. So that would have been, what, 33? No, yeah, 33, which is $330 per spread, as opposed to what we were looking for down here, about $90 per spread. So, and then again, it's always trader's prerogative. If something comes along that gives you a better, it leans towards more in a particular strategy based on your analysis and your take of what's going on in the market, and you want to let it ride, it's always up to you. Okay, so that's that. So this one basically allowed only the level 1. So they were filled, hit both targets, so should be out with some level of realized gain. This one, we are out. And then the last one I just want to briefly introduce here. This is a bull spread that is, in heating oil. Strategy number 317 is the heating oil bull spread. The months are the November versus January. Margin requirement 610. And then the risk reward here you can see for level 2 traders, more conservative entry, and then more aggressive average in traders. What we're looking to do is get long, and we're looking to get long from negative 75 or negative 106. And we already touched through 75 today. So depending on when you get this or see this, you will maybe not get that one, or maybe even be able to do some price improvement. Next level is negative 106, which isn't too much farther from today's entry. Stop is negative 166, and then we got our targets up top there. So we're going counter trend in a way, because this market had a big push to the downside for about the whole of the, a chunk of the second quarter. Had a recovery rally, just kind of been pushing lower again. So basically, we're looking for a retest of this low amongst a bigger downtrend. And so I would call that counter trend. And then we would just want to see this thing basically hold near the low and then rotate back up. So that is new strategy number 317, bull spread in heating oil. Okay, so rice was some level of loss. The crude is still ongoing. The feeder cattle, no fill. The fat cattle, we are sitting in a realized loss category for those who stuck with the stop. For those who are still involved, you're sitting with an unrealized loss. Natty gas is no fill yet. We'll sit patiently on the sideline for that one. Gold sitting with a realized loss on this one. That's the way it's going to go down in our books for our strategy sheet. And then the heating oil is a new one that we introduced. All right. So think that brings everything up to speed. If you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there. And thanks so much for watching.